Welcome to the Trading Market Technicals morning call video for Friday, January the 10th. Markets took a little bit of a break. Dow Jones down 17, Nasdaq down 9, S&P up 64 cents, and the Russell up 89 cents. And that's basically due to the report this morning coming out, the non-farm payroll is a big number. Most of traders and investors usually kind of take a little bit of a break, waiting to see how the markets will react, and that's really the key: how the market's going to react. And nobody really knows. This would be just a guessing game. It's not the number; it's how the markets react to the number, which is going to really give us the next clue or the next trend if we're going to indeed move higher, or we are going to start selling off and traders are going to start taking profits. So that's something that I'm going to be waiting for this morning at 8:30. Very quiet session yesterday, and again, to be expected, having a big number like this. Don't think a lot of traders would want to take too many positions either way, and that's sure the case with me. All right, so I want to show you a couple small indicators here just to show you that we are now on a sell signal in a bullish percent SPX, as you can see here. Pretty reliable indicator. This, gave us a little bit of a chop here, but as you can see, we went on a buy signal, and we got at least a good 50, 30, about 35 to 50 S&P points. So now this is back on a sell signal, getting further away from the 8 EMA. So something really to keep an eye on here. Now, obviously, news will trump the charts. The economic numbers coming out this morning could literally turn this thing back to the upside. So really doesn't mean much today. We'll see what happens though, but just wanted you to be aware that we do have a sell signal in the SPX. Okay, now bullish. The stocks above the 50-day moving average, as you can see here. I'll just draw a symmetrical triangle. So it looks like that energy is building here in this indicator. So I like to see which way does it break. But right now, when you get to these areas, as you know, we usually get a little bit of a sell-off. So it's good to see how and where this thing will actually end up, maybe down to the 40-50%. If we can get back down to here, which would take a lot for the markets, though, at this point, to really sell off. But we haven't really seen much selling. So that's something interesting. Some interesting developments here. So, well, again, we'll see, and I'm going to show you a couple of areas, key areas I'll be looking for today, if this market does have some additional legs. Now, one thing that I'm worried about, I pointed out, was China and the emerging markets. Now, emerging markets here are really taking it on the chin, and this here, if the next area really is going to be 38.50. And if we lose at 38.50, we could really come down to this pivotal low here, and this swing low at this area here. So this is not looking too good. And the reason why I say this, emerging markets really were one worldwide market now. As you can see, Europeans come in buying the S&P early on, selling it before their close at 11:30 our time, and then markets kind of run back up again. So we have an interactive market here, and this is something that's a concern to me if this market wants to move higher. And my guess, and again, this is just a pure guess, is that I feel that the markets will probably try to run up for the highs, take the highs out, and to get everybody on the long side, and then roll over. And that's when we'll start that correction, because remember, the markets are made to fool the masses. All right, here's the China ETF, FXI. And again, this is a little concern to me, because China buys a big bulk of our commodities, and if China is tightening the reins, well, so will the commodity sector as well. CRB, take a look at the CRB index. You could take a look at that, and you'll see it's been relatively weak. Crude oil has gotten decimated, and that's the next chart that I want to show you. The WTI. This is the West Texas Intermediate crude. A break below 92, I think you're going to get a really big flush back down to these lows again. And why? We have the volume profiles are non-existent. There's a thin zone in this area, and this is this big area. It needs to hold. We're up now a little bit. We're up almost $1, so it did a good job holding. It did break below that, and then buyers stepped in and bid this up. But I would definitely stay away from this. I would not short it. I would not buy it here at the moment. It's going to need to make another base like this. And anywhere where this could go anywhere. And we had crude inventories. We had a surprise build. So that's not good. That's not helping the price action in crude. Now, I want to show you this area. This is the bullish percent for the energy sector. What I'm really looking for, and here's the USO down below, I want to see the bullish percent break below 50. And I want to really see a washout. Where it can get down to a 35, 40, 45%. Now, it's a little bit far-fetched, but if we can get, into the 40s, and this could base a little bit. I think that's going to be a fantastic long trade for crude driving up into the driving season. And crude starts to really pick up right around now to the end of the month and goes all the way before May, where you get a good seasonal strength in crude oil. Okay. Now, as far as gold and the precious metals, I don't have any charts because really nothing has changed. But I want you to really keep an eye on the silver trade. Silver seasonality trends are January and February. Silver's trying to bottom. I think that non-farm payrolls are really going to decide the fate of silver and gold today. So we could get a big flush to the downside, which that should be bought with two hands. And reason why is because once you get that flush, that really alleviates the selling pressure, and then we get a decent little run up. And the precious metal sector, silver, gold, copper, palladium, platinum, they're known to flush and then trend, and they have a massive, really hard reversal trade. So we get that counter trend trade. You can easily see gold, in 3-4 days, up $100 and still be in a bear market, because gold is technically in a bear market. I showed you the monthly chart of gold. We have now entered a bear market territory in gold, but that does not mean you can have violent retracements, and that's actually good, really fun to play. So just keep an eye on the silver. Keep an eye on silver will be the SLV, the ETF. Obviously, gold will be the GLD ETF. I'll show you the GLD trade here, but just keep an eye on it. But this is also something that I'm looking for here in the coming weeks to look to get back involved in crude oil. Okay, let's take a look at now the indices. Now here's the E-mini S&P. Here's what I'm looking for. We need to take out 1838. If we take out 1838, I think we'll challenge the highs and probably take out the highs, 1850-ish, somewhere in that area, and then we will look to see some failure and possibly put a local top in place and then make that actually even a tradable top. But again, we don't know that. We're not going to know until this morning non-farm payroll numbers come out, because if the numbers, how they react, are bad, on a closing basis, I'm looking at 1820 below. On a closing basis now, not on an intraday basis, on a closing basis, then I think this market on any rallies can be sold into. Okay, but right now we're in no man's land here. We're about 20 handles in between. As you can see, since the beginning of the year, we really have done nothing. We really just based since the beginning of the year. And so, again, at the moment, this is a stock picker's market right now. There are selective stocks that are moving. There's sector rotation, money coming out of one sector going into another, and that's what needs to be found. After today, I think we'll set the tone of what's happening for the month and actually moving forward with this type of rally that's going on. So again, we'll just take it one step at a time. But there's a lot of opportunity in the coming weeks and months in this market. All right, so here's the E-mini S&P. As you can see, 1838, mark that down. 1820 below would be the short side. 1838 would be a quick run up. Now, how would you play this? I would look for quality stocks that have either sold off, maybe an earnings announcement or whatever, but something that hasn't really sold off too hard, that managed to hold up relatively well within this chop. I would be looking for entries in that area, staying still on the long side. Okay. Now let's take a look at the spiders. And again, spiders really not much going on. As you can see here, 1, 2, 3, 4, 5, 6 days of really just basing here in the indices. And we're above the 20, above the 50. So this is still bullish. And that's why I think we still have a good shot for a move higher. But again, remember, news will trump the charts. Depends on what the S&P does, what the non-farm payroll numbers come out. We're up about 6 handles now in the morning session, but it means absolutely nothing. 6 handles will get wiped out in a matter of seconds, a millisecond, if the markets don't like the number. Okay, so anyway, we're still stuck in this range here. Let's see if we can get a little bit of a breakout, and then we're going to dive down into some of these sectors, and we're going to look for some trade ideas. Diamond, same thing, holding up well. But again, took it on the chin for a couple of days, but still holding up above this long-term uptrend line from November 2012. So still holding up relatively well. IYT, transportation sector, they got to love it. Obviously, lower oil prices actually fuel their bottom line, the trucking, the railroads, the airlines. And the airlines have been on fire because of that. Also, believe it or not, if the lower oil costs, it's like a stimulus package. It's instant money in consumers' pockets, right? They're not spending as much at the pump. So that actually bodes well for equities as well. All right, so IWM, good gauge of risk. Just sitting here again, we're just consolidating, all right? So there's energy building. Look at the Bollinger Band starting to pinch here. So it doesn't tell you what direction, but if the direction seems to be up, it looks like up might be the right. So let's see what happens today. But again, above the 20, above the 50, holding above the upper end of the range. Nothing wrong with this stock at all. The indice at all looks like more bullish than ever. Qs. Lastly, tech holding up relatively well here. Apple didn't do too well for the last few days. I've been mentioning looks like a bear flag. Started to break down again. So we'll just see, but I'll show you the chart in a moment. Looking for a test of the highs or a break back higher. And Bollinger Bands again starting to pinch higher here. Okay. Now let's dial down into some of these sectors. GLD. Really just consolidating. Gold has not done anything in the last few days. It's basically consolidating. Now, gold's going to do one or two things, and that's how gold acts. It's either going to dump really hard today, or it's going to rally really hard. And if that's the case, if it can rally back up to this area and then start to fail, well, then I think we got a quick short. Now, it's got to let us in, though. As you can see, we have these large gaps. Every time we're looking at short, I could never get in. Next day, the gap down, $2-3, and then that would be it. But anyway, this is something I'm going to be watching today too as well, again, as well as silver. All right, now here is, we talked about the oil sector, right? We talked about crude oil. This is something that's really interesting. XLE, which is another oil ETF, but it has a lot of oil services sector. It has some refineries. So ExxonMobil and ConocoPhillips is one of the two heavy weighted in this index. And ExxonMobil has actually been moving pretty steadily to the upside, and that's keeping the XLE up. Now, as you can see here, we have a huge bearish rising wedge from beginning of October all the way till now. If oil continues to break down, there's a couple here in this sector that I like for a move lower, and this is something I'm going to be looking at for a possible short trade. And a couple of them are going to be COP, PXD, Halliburton, HAL, and APC. Those are the few weak ones in the group. Okay. Now the reason why I think that this has been going up and trading ETFs within the stocks within the ETF, is because you have the two heavily weighted in the index moving higher, pushing this ETF higher as well. So something to keep an eye on. Now remember, this is a bearish rising wedge, but only bearish when it breaks the lower trend line on a closing basis, right? And usually what we would do is look for that bearish signal for a breakdown, and usually would get a back test, which would create another bear flag, and then that's that move lower is really what you want to get involved in. Okay, but this is something that we're going to be watching here in the XLF in the coming days as well. Here's the USO. We already went over this. Again, thin zone here. If you look back, if we lose this area, okay, that's going to be a big flush, I believe, back down to the 3084. And then that's where something that we would reevaluate if we can base a little bit higher here. So something we're going to keep an eye on, okay? XHB, take a look at the home builders. I'm stalking this sector. Again, be patient. We have bull flags upon us on this sector, so we're looking for another move higher. I want to see them break out of this bull flag. Right, we have a higher low from here, very bullish, holding above the 20. But even if we get him, if we get a little bit of a push lower, I would still be enticed to actually nibble into the builders. But this is the XHB ETF for the home builders. Take a look at Lennar, another one of my favorites. As you can see here, again, another bull flag. So this is something that we're going to be watching, see if we can break out of this bull flag. Okay, same thing with Pulte Homes, and that Pulte I like a lot. I think it has a lot of upside potential. Here's another bull flag. Okay, for another move higher above the 20, right on the 8, and a beautiful symmetrical triangle. And look at this thin zone. I mean, this thing has plenty of room to run easily to the 2350 area. Okay, so here's Pulte, PHM. KBH, another one I really like. And the reason why I like is this really hasn't gone yet. And if a lot of money starts going into the builders, they're going to start looking for stocks that haven't moved. And this is one of them, okay? Now, we're just sitting above the 50. And you could make case, oh, well, why hasn't it moved? Well, it could be a lot of things. But the thing is that this is something that I would be looking for an explosive move higher. And this here would really like to get above this area here, about 1840. And that's KBH. And we take a look at the XLF. Now, the remember, it's earnings season. Alcoa reported yesterday, and they missed their numbers. So Alcoa got hurt yesterday night after the close. Now, J.P. Morgan and I think Wells Fargo, some of the bigger stocks are going to report. So I'd stay away from accumulating any long position in some of the bank stocks. But as you can see, they're on fire. Citibank is on fire. Got upgraded again. So I think the next pullback and should be bought. I think even regardless if they come out and they report their numbers are not so great or whatever, that's going to be a buying opportunity. That's really what you want to get involved with some of this. Now, obviously, things do change, but let's just see, take it one step at a time. I would not be chasing it. Look at the Bollinger Bands. They're way overextended. So a pullback into this zone area, 53, 53 and a half, would be probably a good first entry to start nibbling into Citibank. JP Morgan, same thing. As you can see, this is way overextended. We got that breakout of that bull flag that we mentioned back a couple weeks back. Now it's just kind of meandering at the highs here. So really a bit stretched. I wouldn't touch JP Morgan. Needs a lot of work coming to the downside, as well as Goldman Sachs. Now, Goldman Sachs is starting to pinch here again. So be interesting to see what happens. Maybe they push lower, but I do think the banks and the home builders, as well as gold and oil, solars are going to be great trades going into 2014. Let's take a look at Apple. And again, Apple broke that bear flag yesterday that I mentioned. So I think the next target's going to be about 517, 520. Wouldn't be looking to pick a bottom here in Apple. Let it base, and then let's see if we can take out that base for new highs, okay? Oh, one thing I wanted to show you was coal as well. Now, coal has been really getting decimated. Coal, natural gas, crude, they're all moving lower, and that's why I wanted to show you the XLE. You can see that XLE has not moved lower. Actually, has been moving higher. And again, heavily weighted is ExxonMobil, and that's been really carrying that. So if they really succumb to some pressure, XLE will definitely be one of them. And the stocks that I mentioned would be a possible short candidate. Again, needing a trigger and needing an entry. All right, guys, that's pretty much it. Have a great day, and enjoy the weekend, and we will speak to you first thing Monday morning. Have a great day, everybody. Take care.